Okay, Johnson, we are live. Okay, welcome everybody to Wall Street Reporter's next Super Stock live stream, CEO live chat for November 19th. Welcome everybody to Wall Street Reporter's feedback. we got one. Okay, we got to turn off. Let me turn off the connection here. Here we go. Live. Okay. I'll start again because this is going to be on YouTube. Okay. Welcome everybody to Wall Street Reporter's next Super Stock live stream for today, November 19th. We have with us once again Johnson Joseph. He is the CEO of Fintech, PKKFF, PKK on the CSE. Johnson, welcome back.
Hey, Jack. Nice to be back.
Johnson, our audience, well, we got a lot of people. I think we got a couple hundred people right now so far in the first few minutes. So a lot of people are excited. The audience has been growing. Every time you're back, I think we get people because every time you're back, the stock keeps going higher. We started off at about, what is it, 50 cents? I think it was 40 cents. 40 cents a couple months ago. We're about $1.53 Canadian today. So our audience needs to know right now, what's going to get the stock to $5. So let's talk about that.
Well, Jack, when I first came on the show, when I came on the show a few weeks ago, I mentioned that our deal with BDC, Consumer Products Distributor BDC, was the biggest deal, the biggest partnership in the company history. Well, that was then, this is now. The transaction that we announced this morning with BJM, I believe, is now the most important transaction in Peak's history. Just here's what I mean by that. Just the relationship that BJM has with COFCO alone is priceless, absolutely priceless for us. Now, for those in the audience who don't know who COFCO is, I would strongly recommend you go to COFCO.com, look them up, take a look for yourself at what this company does. Essentially, COFCO is the largest food processing company in all of China. They're essentially China's breadbasket. They produce rice, meats, wine, soft drink, sugar, cereal, you name it. If it can be consumed, it's made and produced by COFCO. Now, their products can be found at grocery stores, on store shelves, convenience stores, online, offline, pretty much anywhere you shop in China, you will find COFCO's products. And now we have a partnership with one of their biggest distributors. This is absolutely huge for us. So as most people know, being in the food business, you know what? There's always going to be demand for food.
Right. Everybody needs food. This
is a business that is
not going away. It's not going to be obsolete.
Proof. It is pandemic proof. So it's an ongoing business. And BJM's business hasn't slowed because of the pandemic. Quite contrary, business picked up for them. So, and we have a partnership with this company right now. It is absolutely priceless for us. So that's why I believe that this is the biggest deal in Peak's history.
So, one thing I think, investors should know also is not only forget about the pandemic, the Chinese economy right now is booming. I mean, it's taking off. So let's kind of talk about what this deal with BJM could really means in terms of revenue. So people, investors can understand the potential. So essentially, you're doing what? You're going to be providing the platform for them so that they have 250,000 customers. BJM, right?
Correct.
So
yes.
250,000 of their resellers, retailers.
They're essentially retailers. Yes, correct. Yes.
And essentially, you're going to offer these 250,000 retailers your, basically lending platform.
Correct. Listen, as excited as we are about this partnership, BJM CEO, Mr. Zhang, is even more excited than we are, believe it or not. Okay.
Well, they're going to generate more revenues if their people can borrow money.
Absolutely. Listen, we all know that there's a systemic cash flow problem affecting most businesses in China. Okay, so this cash flow problem is preventing those businesses from achieving their full potential. Now, Mr. Zhang strongly believes that by offering credit to his clients, the retailers, the 250,000 retailers that you mentioned, by offering credit to these retailers, it's going to free up their cash flow. It's going to make it easier for them to manage their businesses, to buy more product from them. So essentially, it's a win-win situation, right? So he's happy because now all of a sudden, his clients have access to credit. Once we qualify them through this program, through the Cuba Lending Hub, they will qualify for credit and be able to purchase more goods from them. Believe it or not, if we do things properly, this can even impact COFCO's business. Now, I mentioned earlier, just a couple minutes ago, that the relationship that BJM has with COFCO is priceless for us. Now, what that relationship does, Jack, is that it takes us one step closer. I mean, COFCO they're humongous, they're a giant, right? Like, I mean, we would never thought, of approaching COFCO ourselves. But because of this relationship that we have with BJM, now entities like COFCO and clients like JD.com. JD.com, by the way, is also a client of BJM. It gets us one step closer to these giants in order for us to expand our businesses across the country. So that's why this is huge for us.
Okay. Now, what do you think? I mean, obviously, the main question I guess people are asking, I'm surprised nobody's asked this yet, is what can this deal with BJM generate in terms of revenues, for peak?
Okay, that's an excellent question. Now, I mentioned this to people before. We have to be careful, right? So we cannot disclose people's, BJM is a private company, so we have to be careful in terms of how we talk about their sales and everything else. That's number one. The second thing is we have to be careful not to talk about too much interest, because we are a platform, right? So the way we generate revenue is we charge service fees to the lending institutions for basically finding them lending opportunities, right? And providing credit monitoring services, qualifying the businesses, and so on and so forth, right? So we try to equate that to an interest rate, a value, so our shareholders and investors have a better understanding of potentially what this could mean in terms of revenue for us. Now, that being said, we're still tabulating the information for this deal with BJM. All I'm going to say right now is that we had mentioned that the BDC deal potentially, right, could be worth 1.3 billion in annual service fee revenues for the company. Let's just say that BJM is at least that amount and is more than the previous deal that we announced. So that's another reason why we think that this deal is the biggest deal in the company's history. Now, in terms of revenue potential, this is something I want to mention, Jack. I think it's very important to mention. Now, obviously, BDC has 60,000 clients. BJM's got 250,000 clients, right? So people should not expect that we're going to have all of these clients signed up on the platform tomorrow, right? So right. I can see people already with their calculators, 1.3 billion and, carry the two, blah, blah, and stuff like, PKK is going to be making 2 billion in revenue next year. No, it doesn't work that way. What we have to focus on is really have to focus on the adoption rate. And that's why I mentioned before with the BDC deal, we launched this last week, right? So we had our first transactions. Now, what we're going to be doing over the next weeks and months is we're going to be monitoring the adoption rate, how quickly we're able to sign up these businesses on the platform, what percentage of them are going to be regular subscribers to the financing. We suspect that a significant percentage will be taking advantage of the program. But until we have real data, we're kind of like guessing at this point, right? So we also mentioned on a previous appearance that I made that we're going to be revising our forecasts, right? So we're waiting to revise our forecast. We're waiting to see what the adoption rate is, how much financing these people, these clients are requesting, and that's going to give us a better idea in terms of revenue potential. We're going to need to do the same thing with this BJM deal. Now, we just announced the deal. The integration work shouldn't take too long from the experience that we had with the BDC. So we fully expect that some transactions will happen with the BJM deal before the end of this year. So hopefully we'll have a few transactions, we'll do the monitoring, and early 2021 we'll be in a much better position to say, okay, you know what, this is how much we can expect from this partnership. The other thing is that the year's not over, right? I mean, we have an absolute machine in China, a business development machine. So this BDC deal that we announced a few weeks ago, the BGM deal, these are just two distributors, right? So there's really nothing preventing us from doing other deals. I'm not saying we're going to have other distributor deals between now and the end of the year, but that's something that can also happen, and that will have an impact on the revenue potential of the company.
Okay, so we're going to jump into, we got a lot of audience questions. We're going to jump into those questions. But, you know, I think last week you announced kind of, which I think was one of the most important news releases you've had, is this, you know, speaking, which kind of gives maybe people some insight into the potential adoption rate of the BDC deal. You reported some initial results. So can you kind of, you know, expound on that? Like, you know, give us some more details on kind of the initial uptake that you're getting, and maybe what people can learn from that.
Yeah, actually, yeah. What we announced last week was that we're expecting the program with the BDC to start by the first or second week of December. Some of BDC's clients jumped the gun. They had an opportunity, even though everything wasn't completely ready to go from a technical standpoint with regards to the program. They had an opportunity, and they wanted to know if they could get started sooner rather than later. So if that's any indication in terms of adoption rate, it bodes well. Now, I'm not going to say right now what we expect in the first few months, but more businesses, since that transaction, more businesses have signed on. I think we had four, right? Last week we announced transactions implicating 4 retailers that were clients of BDC. Since then, more have been added to the platform. A few more have been added to the platform. There have been more transactions, but again, we're waiting to see, to have a little bit more history, if you will, before we start publishing this information. But in terms of adoption rate, what I can say is that it's very encouraging, Jack.
Okay. So let's jump into the questions. I guess this kind of ties into that. What percentage penetration are you looking at between this, what is it, the BJM, BDC, any of the new partners that you're going to be signing on? They have, you talk about 300,000, a universe of right now. In other words, right now your universe is 300,000. So what percentage are you going to get? 30,000, 60,000?
You know what? Like when we looked at the numbers for BDC, we were forecasting it's a ramp up, right? Like, I mean, the first 12 months, we're expecting anywhere. You know what? I'll give a range. Okay, this is a little bit safer, so I'll give a range, right? So the first 12 months, let's say between 15 to 30%. I don't know if that's that's reasonable. And then depending on how that goes, we'll see, like, the second 12 months and so on and so forth, right? So eventually the businesses that sign up, the businesses that are clients of BDC and BJM, these are retailers, and retailers typically, they buy merchandise on a regular basis. They need cash to replenish their inventory and so on and so forth. So we really expect that once the program is really known, okay, and it's working well, we anticipate that over the next 3 years, we can approach anywhere between 40 to 50% of these businesses will become regular clients for us.
Okay. So in the food business, it's a much higher volume of transactions, right? The inventory is different, so you're going to have potential. Actually, here's Sarfraz. I guess this question here. You mentioned the revenue, the potential of BDC was 1.5 billion. So what is the revenue potential of this deal? You know, if you get full adoption of the 100%, which, you know, you probably won't, but what if you did?
You know what? I addressed that earlier. All I can say at this point, unfortunately, so far as I cannot be too precise for the time being. But all I'm saying is that this new deal is at least, okay, in terms of revenue potential, it is at least as large as the BDC deal, but it's larger.
Okay, so Derek is asking about Kofco. Now, how do you spell Kofco? It's COFCO?
That's right.
Okay, and like he wants to, what like U.S. companies similar to it that they can compare to? I don't know, Archer Daniel Midland. I mean, who's like Kofco in the U.S.?
Oh, good gosh.
Do they have something like that?
Yeah, it's hard to compare Kofco to a U.S. or Canadian, a similar U.S. or Canadian company, because Kofco is a state-owned entity, right? They have resources that other companies do not have. But think of Kofco as, what's the big name? Maybe like General Mills in the U.S. They make Post-brand cereals. They make what's
Everything. They make a lot of different, I mean, thousands,
right.
hundreds, yeah.
They make flour, like, you know, like all kinds of, you know, consumable goods, right? So think of Kofco as a company like that, but to a power of X, right? Because they're a state-owned company, bigger market in China. The U.S. has a population of what, 300 million. China's got a population of like 1.4 billion people. So obviously, like, I mean, it's a much larger company than I think anything that we would have here in North America.
Sean's asking about, let's talk about maybe the revenue model. We have, you know, a lot of new people in the audience. So how does your revenue model work? So basically, you know, these potential consumers, they need a loan. You know, let's go through the whole platform, because we do have a lot of new people. So explain to them exactly, you know, what Peak does, how you make money exactly.
Sure. Okay. So what we do is we operate a platform called the Cubular Lending Hub, and the Cubular Lending Hub, what it does is it matches small and medium-sized businesses that are looking for funding with the right lenders using analytics and artificial intelligence. So what the Lending Hub is, it's an ecosystem of small businesses and lending financial institutions. So those lending financial institutions could be banks, they could be alternative lenders, or we're not a P2P platform. Okay, so we do not allow individuals to lend and to borrow on our platform. So the lending institutions have to be, like I said, institutions. They have to be businesses. Okay, so that's what we do, and we charge a service fee. Now, very importantly, I know there was a lot of a few weeks ago about Ant Financial's IPO. A lot of people compared Ant to us. They are a platform, but the difference between Ant and us is Ant is actually providing, they're essentially a platform, but they're also a bank. They provide investment services. They provide mutual funds. Well, no, money market funds. I'm sorry. So they were perceived
financial conglomerate, really. I mean,
yeah, they're a diversified financial services company, right? So they were subject to certain regulations, which we are not, right? The reason we're not is because we charge service fees. We do not charge interest, right? So the financial institutions that do business on the Cubular Lending Hub, they charge the clients in interest. They charge the clients, obviously, interest for lending them the capital, right? What we do is we charge the financial institutions a fee. What we have done is we tried to make it simpler for people, for our shareholders to understand by equating our fees to a percentage of the interest rate charged by the financial institutions. But our fees are actually based on the opportunities that we present, the matching, right? So bringing the right lending opportunity to the financial institution, we charge a fee for that. Depending also on how long the loan is for, the fee, we charge another fee, for instance, right? So these are typically short-term loans, anywhere between 3 months to 6 months. Sometimes they'll go as much as 12 to 18 months, right? So we provide monitoring services. So while the loan is active, the financial institution can use Kubler, Lending Hub, to follow the progression of the business, right? So if the business, for some reason, while the loan is still active, if the business runs into issues or anything like that, then the lending institution can take measures to communicate with the borrower and say, hey, you know, are you going to be okay to make this payment? Whatever, can we work together? So that service we also charge a fee for. Now, depending on how long the loan is, obviously, if we have to provide the service for a longer term of time, the fee will be a little bit higher, right? And the other thing that that is part of the fee model is oftentimes when people borrow, it's to purchase, replenish inventory. There is a good associated with that, right? So dealing with the supply chain specifically, if a client gets a purchase order finance for a particular material, that material needs to get shipped. It needs to be warehoused oftentimes. So we have partners that provide logistics, shipping, warehousing, and charge a markup on those fees as well. So the fees that we charge essentially are a package, and we don't, like, you know, to simplify it, we tell people, hey, you know what, you can expect us to earn between 2 to 4% of the interest rate charged by the lending institution. So it makes it easier for people to understand.
So 2% of the rate charged.
Correct.
You keep. Okay. So let's say in terms of, let's call it in dollar terms, or so in other words, if somebody borrows, you know, let's call it $10,000, they're paying 10%. You get 2% of what? You get 2% of the interest rate on that 10%. Is it, you know, or on top?
No, we get, no, it's not on top or anything like that, right? Because then we would be like, you know, the interest with the lender. That's something that we do not do, right? So the fees that we charge to the lender will resemble, let's say, about 2% of.
So you're not okay. So basically, you're not charging interest per se. It's
no,
fees, but they add up to roughly. So it's like
exactly. That's exactly what we're saying.
Yes. Make, you know, politically correct, you know, in with, you know, the government and everything else. And I think one key thing I think people need to understand is that, you know, I think where Ant got into trouble, you know, there's a whole, you know, the politics in China are complicated, and Ant, I think, you know, they may have stepped on some toes, or a little bit too big. They're getting a little, like, too much centralized power. And, you know, what you're doing is essentially, you know, Peak is working with multiple financial institutions, banks. So the money gets spread around. It makes a lot of people happy. So you have more support, shall we say?
Right. Yes, you can put it that way. Yeah.
Okay. So it's a key point to understand. Okay. So we got okay. Let's go to a couple more questions. Network effect is an interesting question here. The network effect. You basically, you are getting kind of a network effect and first moving. Is it a first move? I mean, there are other people, but, you know, you're getting scale in this business.
Yes. Another thing I want to mention about what we've done, right? Like, I mean, for those who are not familiar with the company, we're in a business that is extremely scalable, right? First of all, the demand, right? I think most people can understand that small and medium-sized businesses, micro businesses, struggle to have access to credit, right? And having enough information, having insight that you need in order to safely lend to those small and micro businesses is not always, like, you know, easy. So we provide both the service, obviously, to the small and micro businesses, and to the lending institutions as well, right? So it's a win-win for everybody that's involved. That's why our business has gained so much traction over the last couple of years, right? Now, where we're at right now is we are in a growth stage, right? So it's all about scalability and how quickly can we expand our services throughout China. That's the name of the game for us right now. Now, what we have done, I think the question had to do mention about networking, right? It really is all about networking for us right now. Now, think about the major ways in which we have that we have at our disposal right now that we started to demonstrate in which we can expand our business, right? So we have the Jinshar platform. The Jinshar platform is a mobile app used by loan brokers, right? So they're out there pounding the loan brokerage sales reps are out there. It's their job. They're pounding the pavement every day they wake up, trying to find clients, right? Trying to find people who need loans. That's how they make their money, right? So we have an app now that these brokers can use. Whenever they have a lead, they submit it to the Lending Hub and they earn commission on that. So that's number one. Okay, so we have, Jinshahar had at last count close to 40,000, if not more, loan brokerage reps who are feeding leads into the platform. Secondly, a couple weeks ago, we announced our second financial center, right? So the financial center is something that a concept that we're working with local governments, where we implement the Lending Hub concept on a citywide level, right? So we did that in the city of Jiangyin. We had a second financial center that we're setting up right now with the city of Nanjing, right? So the concept behind the financial center is, this is something that is being pushed again by the local government. The local government is inviting all of the city's small and micro businesses to join this financial center and to qualify them, to use the Lending Hub to qualify them for credit, for loans from the city's lending institutions, banks and lending institutions. So that's the second way, okay? So the financial center concept is something that we can go city to city in order to expand our services. And third is what we just mentioned, what we've been talking about today, is this, this financing program that we established with some of the country's largest distributors, right? So we are right now attacking the retail world. We know that there's a huge demand for our services in the retail space, right? So retailers buy, as I mentioned earlier, they buy merchandise, inventory on a regular basis. They buy and they sell. So there's a huge turnover, right? So they constantly need financing. They are the ideal clients for our services. Now, by working with these large distributors, BDC, we picked up one agreement, we picked up 60,000 potential clients. BJM, one agreement, we picked up potentially 250,000 clients. So you see here, by working with these distributors, we can, how quickly we can scale up and expand the Lending Hub services throughout China. So what it comes down to, Jack, is, as they say, rinse and repeat, right? So we have the formula right now where we basically can just replicate everything that we're doing. This is a very scalable business. We have potentially right now, 310,000 clients with these two agreements. And we have a pool of 100 million small and micro businesses. That's our client base. So we're just getting started here, right? It's just a repetition game for us.
It's like any, you know, it's like any of the, any of the huge tech companies you see, they have a similar kind of model. But here's what's interesting, I think, Johnson, so basically the takeaway is you have multiple channels of getting business. You have the guys bringing the deals, you have these big partnerships, then you have the deals with the cities so there's multiple channels. But I think one of the key things is you have this, which again, we gotta talk about this more, is the AI, the analytics that you have, the big data, the machine learning, the deep learning, whatever you want to call it. As you're getting thousands and thousands, or maybe it could be millions of transactions coming through, your system is basically, that data becomes very valuable. That learning, like default rates, payment, all that stuff, it becomes as much as the business than the
other. Absolutely, Jack. Like, I mean, again,
it becomes more valuable.
That's an excellent point. And again, this is something that a lot of people don't realize about the Peak Fintech Group, right? So we are at the core, we're an analytics company, right? So we provide analytics right now, artificial intelligence for banks and lending institutions. But as you mentioned, the more transactions that get processed through the platform, right, the better the analytics get, the better the AI gets, right? So we're becoming better and better at predicting defaults, okay, loan defaults, which makes the services that we provide more and more valuable to the banks and the lending institutions that do business with us. And the other thing is, yes, there is a massive amount of information here that we're accumulating, and this data can help, can be used for different purposes, right? So the lending institutions right now, the financial institutions, they're using us. They're using Peak Fintech Group basically to mitigate credit risk. to find clients and increase their loan books, right? But this information can be used to provide additional services, okay, to these clients, these hundreds of thousands of businesses that are our clients right now, insurance, all of these products. But the good thing about us, though, is that our plan is to continue to remain an analytics company. So we don't want to provide any of these services. I know it could be tempting, right? So you have all these clients, you have all this information. Hey, why not be like Ant and start providing, banking, insurance, or whatever and stuff like that. It's tempting, but we're committed to remaining an analytics company. We believe that other companies, insurance companies, other companies that want to provide services to small businesses and small business owners will eventually turn to us, and we're going to be able to work with them.
Okay, no, it's a great strategy, especially in China. I mean, you don't want to get too involved in a lot of things because, again, you want to sort of keep your head down, make money, and scale. So we're kind of running out of time. We've got time for just a few more questions. Johnson, we're gonna have to have you back next week. We're gonna probably spend like at least an hour, maybe an hour and a half, because we're gonna have a lot of questions. Eric is asking. We had a couple of people asking. Global expansion. What's the plan for expanding globally beyond China?
Listen, I've said this in the past. China is the biggest market for us, right? And our clients are small and medium micro businesses. There's no bigger market than China. So we want to do China right? So we wanted to take our time, do China right, and grow the business. But there are a couple of countries that are on our radar screen right now. Asian countries, potentially European countries. But right now, really, we really want to focus on China. So by 2021, at some point before the end of 2021, we may get more serious in terms of expanding to other markets. But right now, we have tunnel vision, so to speak. Our focus is on China. There's a lot to do in China. These partnerships that we're making, these partnerships with the distributors.
China to make,
Right?
You don't need to leave China for this to be a.
The revenue that we can generate just doing business in China alone is mind-boggling. But we really want to focus on working with the cities, working with the distributors. Again, I mentioned e-commerce is huge in China. The deal, the BJM deal, not only takes us one step closer to doing business with giants like Kafko, but also the online portals, right? I mentioned that JD.com is one of their clients. As people know, we have our eyes on those large e-commerce portals, whether it's JD.com, Tmall, which belongs to Alibaba, Pinduoduo. We really want to have a deal, a partnership agreement with one or all of those huge Chinese portals. So that's really our focus right now.
Okay, Johnson, we got a last question, and we're going to catch up with you probably next week or first week of December. What do you have? What kind of news flow can we expect? What kind of news flow can we expect in the next 2 weeks before you come back? What do you have happening right now?
I can't say too much about it right now, but we'll be filing our Q3 numbers a week from today, actually next Thursday. I believe that there will be a news release to tell people how they can participate to an investor conference call. That news release will go out at the beginning of next week, if I'm not mistaken. But next week, that's going to be our focus, the third quarter numbers. After that, what people can look out for is really just a little bit of more of the same.
Rinse, wash, repeat. People are going to get bored from all these deals at some point.
There you go. Each time we come on the show, we seem to be announcing a bigger deal than the previous deal, right? So obviously, if we were to do something with one of the large e-commerce portals in China, that would be huge for us. That would then be the biggest deal in the company's history. So I'm not saying that we're going to have a deal with one of the e-commerce portals, but this is something that's possible between now and the end of the year, or by the end of the first quarter of next year. Certainly, there's no secret. That's our objective. We want to have a deal with them. We think that it would make a lot of sense for us to be working with one, if not all three of those large portals. So that's something that investors can look forward to.
Okay, so a lot more to come. We're really, I think, in the first inning of the game here.
Absolutely.
So very exciting. Okay, Johnson, thank you for joining us, and we'll have you back as soon as possible.
Always a pleasure, Jack, and I look forward to being back.
Thank you again. And next time, hopefully, the stock will be over $2.
Let's hope so.
I'll see you later. Thank you, Johnson.
All right, Jack.